All right, I've got a very special guest with me today, Brady Mullins from CrossCountry Mortgage. Brady works in our reverse mortgage department. He's a reverse mortgage specialist, much better at reverse mortgages than I am. But I have to tell you, Brady, first of all, welcome to the Loner Ranger radio show.
Thanks, Bruce.
You're welcome. I have to tell you, I have been skeptical of reverse mortgages for years. Now, I've done several of them, but I really seem to be in the school of thought that they're really only right for a small segment of the market. But I think that I may have missed the mark on that. So I'd like you to unveil the truth. Let's talk about the pros, the cons, what works for people, what doesn't work for people. So I've
Sure.
got a couple of questions for you. First of all, tell me a little bit about your background and what led you to reverse mortgages.
So I haven't been doing mortgages for 25 years. I was trained in my career for 20 years, was a financial planner and an accountant. And I wanted to blend in real estate related choices in the financial planning advice that I was giving clients. And that created all sorts of compliance issues in the financial planning space. And I tried to blend that together for a couple of years. And I finally threw up my hands and I sold my practice to some friends of mine. And now I work my mission, and I really feel this way, my passion is to try to bring the real estate related decisions that people make and their personal finances closer together and integrate those better, because traditionally financial advisors don't really talk about the real estate decisions people have to make. And yet it's undeniable that the real estate choices that we must make as adults, because we need shelter, they have a huge financial impact on us. And the financial community doesn't really talk about it.
I agree. It's interesting because I'm teaching a class on May 7th in Tampa on wealth building with real estate. And I will touch on reverse mortgages as a component of that class. But I do believe Americans have mostly missed the mark when it comes to establishing wealth and understanding how money really does work. So let's talk about this. So, why do reverse mortgages even exist? What are they here for?
They're here to solve a specific problem. And the problem is that a huge majority of people's wealth exists in the equity in their home. We all know that the homes we live in have marketable value. They're valuable. Yet that wealth is sitting in something that's, in financial terms, it's illiquid. But what that means is that it's a very clunky asset. I can't sell $5,000 worth of my house if I need $5,000. I either sell the whole thing or I don't. Accessing that wealth, is awkward. There's only three ways that you can do it. You can sell the house and downsize. Now you must downsize, otherwise you're not accessing any wealth. If I just take that wealth and put it into the next home, I didn't access any of it. So I'm either
Correct.
downsizing or renting if I sell it. And by the way, that's not cheap. It
No.
costs 6 to 9% of the value of the house, not your equity, the value of the house, to sell it. Now, I'll be the first to say there are scenarios where that's exactly what somebody should do. If they need to move closer to kids, or maybe even move in with kids, or if they're in the wrong place or the wrong kind of house, then they should sell, and that's fine. But that's one of the ways. And there's a lot of people who that isn't what they want to do. That's just how they can think of to access the wealth in their home. So that's the first way. The second way is you can do traditional financing. So I could do a cash out refinance for my equity,
It's
put
a
a bunch
regular
of,
forward mortgage that we do all the time. Yep.
and those are great solutions in certain circumstances. So I'm not saying people shouldn't do that. I'm just saying it's one of the three ways. But if I do that, I'm putting a bunch of water in the bucket, but I'm also opening a new hole in the bucket, which is the monthly payment. I have a new cash flow, a negative cash flow for the required payments on that mortgage. And again, and that includes traditional cash out refis. It also includes HELOCs. HELOCs would be included in that, where I put a bunch of money in the bucket, but I have a payment now that's required.
Sure.
And there are times where that makes sense. And then the third option is reverse mortgage. And what a reverse mortgage is fundamentally is it's a line of credit, like a HELOC, although there's some major differences, but it allows me to access the equity in my home piece by piece. So I can take out $5,000 instead of because you can't sell $5,000 worth of your house. So I can take it when I need it. Only one of the major differences between it and a HELOC is I can make whatever payment I want. So if I want to make interest only payments, awesome. If I want to pay some interest and principal, awesome. But I don't have to make payments.
You don't
And
have
what
to make a payment at all.
correct. And now
Okay.
clearly it's a balance on a line of credit that I've taken out. So there's going to be interest charged on that, but I can allow that interest to just accrue on the balance rather than making a payment. But if I don't want to see that happen, I can make a payment and not have that happen. The choice is entirely mine.
That's incredible. How does all this work?
So I want to be really clear here. There's a few different kinds of reverse mortgages. So I'm going to explain the one that's by far the most common, which is the variable home equity conversion mortgage is what it's called
Okay.
technically. I hope there's going to be a test at the end. Everybody needs to remember that.
Yeah.
Yeah. We call that the HECM. That's the acronym, probably the ugliest acronym on the planet. HECM does not roll off the tongue. But so that's by far the most popular. So I'll explain that one. It's a line of credit, except it has four very unique features. One is that payments are optional, which we already talked about. If you want to make interest only payments, if you want to make interest principal, if you want to see it disappear over 10 years, you can calculate a payment so that it'll disappear over roughly 10 years. So payments are optional. I can let the charges accrue on the balance. That's the first unique feature. The second one is I don't have to make a payment or pay that balance off for as long as I live in the home and as long as the loan is in good standing. And I know that sounds like a gotcha at the end, like as long as the loan's in good standing, but all that means is I'm keeping up with my property related charges like taxes, insurance.
And that's all you really are required to do is make sure your property taxes and insurance are maintained, and homeowners association if you have one, right?
Yes. And by the way, whether you own the house with a mortgage or own it free and clear or a reverse mortgage, you have to pay those things anyway. So that's like some unique feature. So they're just saying, hey, as long
even
as
if you rent, you're going to have to pay your rent.
yes. So as long as you're paying those things, this loan is in good standing, and then the balance is not due until the last borrower. And we say the last borrower because it's often a married couple, but you could do it if it's just one person. When the last borrower leaves the home, that's when the balance is due. So I could get a reverse mortgage at age 62. That's the youngest you can get the variable HECM. And I could run up the balance entirely and never make a payment till I'm 135 or 140, 150 years old. That the paperwork actually says 150 years old. But let's say I lived there till I'm 102. I live in that house. I may not make a payment for 40 years, and that balance is never due until I finally pass away or move and sell the house, as long as I'm living there and paying property taxes and insurance and stuff.
All right. Then how does someone find out really if this is right for them? Because like I said, I've been skeptical. So what do we need to do to determine whether this is really the right thing for that particular family or that couple? I know I've got one right now that I'm working on with you that he's 78 and she's 57. It caused a little bit of a different scenario, but it can still work, can't it? So tell me, how do we know if this is right for us?
So that's two questions, essentially. One is, how do you know if you qualify? How do you know if you can get one? And the other question is, how do you know if you should get one? So the qualification is, if you're married, one of the two has to be over 62.
Okay.
Now, there are some proprietary products that aren't the FHA insured reverse mortgage that you can be 55 or older. So that exists too. But for the FHA one, you got to be 62 or older. If it's a couple, only one of them has to be 62 or older. So that's how you qualify. And another point of qualification is how much equity do you have? Because these loans they're not 80% LTV loans. They're not 90, 95, 97.
LTV, he means loan to value. So you can't have just 20% in equity. You need closer to 50% in equity.
Yeah. And it pertains to your age. So the older you are, the less equity you have to have. That might be a little too far for today's brief discussion, but if you have 50% equity in your home and they don't do it by dollar. So sometimes people will come to us and they'll say, how come I can't get one? I have $300,000 equity in my house. And we have to tell them, well, your house is worth $1 million and that's only 30%. It has to be a percentage question. So if you have 50% roughly equity in your house or more, and you're 62 or older, it's worth looking at. Then we can run specific details to see if you fall in line, if your age aligns with the LTV, loan to value. So that's the qualification question. The next question is, who really should consider this? And I honestly think about it quite openly. So I'm going to give a little bit of background here because I think this will help explain my answer. I came to the conclusion that a reverse mortgage is one of the most overlooked and underappreciated financial tools when I was a financial advisor and an accountant, which is what I did for 20 years.
Interesting.
Yeah, I wasn't raised to try to sell mortgages and reverse mortgages, and I'm not looking for sound bites on how to sell them. I came to this industry after selling my practice because I thought this is something that people should understand because it applies to way more people than probably think. And it's a really fantastic tool because it's just a line of credit that I can use, which can be very handy in retirement. Or even if you're not retired, lines of credit are very useful tools. And this one is like a line of credit on steroids where I can pick my payment and my credit limit increases regardless of the value of the house. So that's hard to overstate how valuable that is without looking at examples, which we'll skip over today, but that's a very valuable thing. So the question about who qualifies for something like this, we answered that. But when it comes to who should consider this, it's like you have a bunch of wealth sitting in the value of your home. the home equity conversion mortgage, which is this reverse mortgage, it's a tool that you add to the value of your house that allows you to access that equity piecemeal. It makes the equity in your home a usable asset in the financial planning process. Whereas as it is just this big, clunky, huge asset, it's not usable in the financial planning process. And this just makes it liquid and usable.
Couple of quick questions before we got to end this segment. First of all, are there loan limits? And I'm in Florida. Are there loan limits that we have to work with?
There's one on the FHA where if your house is worth more than about 1.2 million, then they don't give you extra credit for that extra value. So the larger my house is value wise, the larger my line of credit will be, but that only applies up to about 1.2 million. So if I have a $1.5 million house, my line of credit is going to be the same size as if it were worth 1.2. But that limit, we can get around that with some of the other proprietary products where that limit isn't a problem.
How long does it take for you to do an interview with a client and determine whether it's right for them?
From a qualification perspective, like 30 seconds.
Okay.
From a conversation about whether it fits in their financial plan, that could be, there's some people, in a really obvious case, people who are low on other assets and they're burning through their cash, they need to tap into their equity because that's how they're going to live with dignity for the last 20 years of their life. There's wealth there. Why not use it? And those cases are easy because it's, when you call the doctor, and then the message machine says, if this is an emergency, call 911. I think about that when people really need that equity, or they're going to be cutting their prescription pills in half or eating hot dogs and peanut butter sandwiches every meal. That's not okay for people.
No, it's not. And I see that quite frequently where people are aging out and they just didn't quite prepare for their future, and Social Security income isn't quite cutting it, but they're sitting on a ton of equity. Yes. So one more thing that you can tell my listeners right now.
Wait, how
do they find out?
Yeah, it's a simple call. There's no obligation to do anything. You call Bruce, the loan arranger, and say, hey, this is my situation. Does this make sense? And Bruce and his team plugs that in and says, here's what this would look like for you. And
very good
to make a decision.
Brady Mullins, CrossCountry Mortgage. I really appreciate you joining me on the Loan Arranger radio show today. What a great interview. You have so much knowledge to share. I can't wait to work with you more and more. If you have an interest in a reverse mortgage, you just want to discover whether it's right for you. No pressure. You're not going to get a sales pitch. You're going to get real, accurate information. And I don't think Brady does any commercials with Tom Selleck. I haven't seen you on TV. So we are not charging you for that extra endorsement from Tom Selleck. Is that right?
That's correct. They would never put a face like this on TV.
CrossCountry Mortgage, direct lender, no middleman. We do it all right in-house. Thank you for joining me on the Loan Arranger radio show. If you have questions about it, feel free to call me. You can reach me in Tampa right now at 813-213-4009 or Orlando 407-706-3313, or go to webringyouhome.com and apply for your mortgage right there. 10 minutes on my application website. Super easy. Brady Mullins, CrossCountry Mortgage. Thanks for joining today. Have a great day.
Thanks, Bruce.